The Metabolic Superpower, a comprehensive guide to Eli Lilly and Company, LLY. As of February 18, 2026, Eli Lilly and Company, ticker LLY, stands as the most valuable healthcare company in history. Earlier this month, on February 4, 2026, Lilly reported fourth quarter 2025 results that sent the stock soaring, solidifying its place as a trillion-dollar titan. While much of the world has spent the last 2 years discussing GLP-1 weight loss drugs, Lilly has moved into a new phase of its evolution, becoming a diversified metabolic platform that is now outpacing its chief rivals. For an investor today, LLY represents a high-growth bet on the obesity revolution. This 1,500-word guide explores the company's recent earnings beat, the high-stakes launch of its new weight loss pill, and the valuation reality of a pharmaceutical company trading at a massive premium. 1. The business model. Dominating the incretin era. Lilly's business is built on incretins, hormones that stimulate insulin and suppress appetite. In 2026, the company is reaping the rewards of a dual-agonist strategy that has proven clinically superior to first-generation competitors. The 3 revenue engines. Mounjaro, diabetes, still the company's largest revenue driver. In Q4 2025, Mounjaro revenue was a primary contributor to the company's $19.3 billion quarterly revenue total. It is the market leader for new prescriptions in type 2 diabetes globally. Zepbound, obesity, the weight loss-specific version of the same drug. In just its second full year on the market, Zepbound has seen explosive growth, with the combined Mounjaro's Zepbound franchise now accounting for over 56% of total company revenue. The new drug portfolio. Beyond weight loss, Lilly is seeing rapid uptake in Kisunla for Alzheimer's and Jaypirca for blood cancers. These non-metabolic drugs provide a safety net for investors, ensuring the company isn't just a one-trick pony. 2. The 2026 game changer, orforglipron, the pill. If 2025 was the year of the injection, 2026 is the year of the weight loss pill. The $1.5 billion stockpile. As of mid-February 2026, Lilly has made a massive high-risk bet. They have already built an inventory of $1.5 billion worth of orforglipron, their experimental oral obesity pill, despite the drug still awaiting a final FDA verdict. The catalyst. The FDA decision is expected on or around April 10, 2026. The strategy. By stockpiling the drug now, Lilly hopes to avoid the supply shortages that plagued the market in 2024. If approved, orforglipron would remove the needle barrier for millions of people who want to lose weight but refuse to self-inject. 3. Recent earnings, February 4, 2026, crushing the consensus. 2 weeks ago, Lilly reported a monster quarter that separated it from its competitor, Novo Nordisk. The numbers. Earnings per share, EPS, reported at $7.54 non-GAAP, easily beating the analyst forecast of roughly $6.93. Quarterly revenue hit $19.3 billion, a 43% increase year over year. The Novo divergence. While rival Novo Nordisk issued cautious guidance, Lilly did the opposite. Lilly projected 2026 revenue of $80 billion to $83 billion, suggesting a roughly 25% growth rate that shocked the market. 4. Access and the government agreement. A major hurdle for LLY has always been coverage. Who pays for a $1,000 a month drug? In late 2025, Lilly signed a landmark agreement with the U.S. government that significantly changes the math for 2026 investors. Medicare breakthrough. Starting as early as April 1, 2026, millions of Americans on government insurance programs will have expanded access to obesity treatments. The price cap. Under new agreements, out-of-pocket costs for many beneficiaries are expected to be capped. This volume-over-price strategy is expected to flood Lilly with millions of new patients, seeking to offset lower prices per unit with massive scale. 5. Financial health, valuation, and dividends. Lilly is currently trading at a forward PE ratio of approximately 45 to 49x. To put that in perspective, many traditional pharmaceutical companies trade at 12 to 15x. You are paying a growth premium for LLY. The dividend story. Dividend growth. On February 4, 2026, the board reinforced its commitment to returning value. While the yield is relatively low, under 1%, the rate of increase is high. Yield versus growth. Lilly has transitioned from a value stock to a growth stock that just happens to pay a dividend. 6. Critical risks, the billion-dollar threats. Before starting an investment in LLY this week, you must be comfortable with 3 significant risks.
Pricing pressure. The U.S. government's new negotiation powers are a constant shadow. If the government demands even steeper discounts on Mounjaro, Lilly's high gross margins, currently around 83%, could begin to erode. Genetic and compounded competition. The weight loss drug market has spawned a massive secondary industry of compounded, copycat margins. While Lilly is suing many of these firms, the volume of cheaper alternatives remains a concern for market share in 2026. Pipeline failure. If the FDA denies or delays orforglipron in April, the $1.5 billion inventory would become a significant financial hit, potentially causing a sharp correction in the stock price. 7. Strategy. How to approach LLY today. In mid-February 2026, LLY is trading near all-time highs, recently crossing the $1,040 level. The momentum play. Wall Street is currently strong buy across the board. Some analyst price targets have shifted as high as $1,141 following the bullish 2026 guidance. The volatility play. Because the stock is priced for perfection, any minor setback feels like a disaster. For a new investor, dollar cost averaging is essential. Buying a small amount now and a small amount after the April 10th FDA decision is a safer way to navigate the pill catalyst. The retirement factor. For long-term investors, LLY has become the NVIDIA of healthcare. It is a stock that you hold because they own the intellectual property of human metabolism, a market that only grows as the global population ages and struggles with weight-related chronic illness. Conclusion. The metabolic monopoly. Eli Lilly, LLY, in 2026, is a company at the peak of its powers. It has outmaneuvered its rivals, secured its supply chain, and is on the verge of launching a pill that could revolutionize how we treat the world's most expensive health problem. The verdict. You aren't buying a drug company, you are buying a technology company that uses biology as its code. While the PE ratio is expensive, the 2026 guidance suggests that the earnings growth is real. If the April launch of the weight loss pill is successful, the $1,000 price level may soon become the new floor for this stock.